You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time to rock out once again with the Option Block, coming at you live every Monday and Thursday, noon Central, 1 p.m. Eastern. You know how to get us live, mixlr.com, that's 1X. MIXLR is how you spell it. And, of course, send in those questions, those comments, those insights. We do love to hear from you guys. And let's see who we got joining me on the old all-star panel today. Let's start off. Let's go out to the realm that is at war, and we need someone holding down the seat of the Iron Throne to keep it all together. Because we are joined once again by Mr. Colin, Song of Ice and Fire himself, holding down the Fidelity hot seat this week. Mr. Song of Ice and Fire, welcome back to the program, sir.
No, thanks for having me on. I've got a little bit of a heat wave this weekend, so a little strange melting away the snow that just fell. So
did it get up to like a balmy 38? What did it get up to out there?
Yeah, we got like mid-40s. It was crazy.
Crazy town, sir. Uh-oh, that means we might have to check in. We might see the ice rink may have melted as well. Let's find out. We are also joined by the rockingest of lobsters himself, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmine Capital. Mr. G, welcome to the show, and let's get right to the point, sir. Did the ice rink survive?
Actually, it was frozen, then it thawed, and now I'm putting more water in. So it's touch and go. We might have a shot. We need live video updates, live stream of your triage to help keep the ice rink alive. Set up a GoFundMe to support the ice rink, the GIOVINAZZI ice rink. Live stream. Stay tuned to it. Gripping, compelling drama here. Listeners, Mother Nature giveth, and she taketh away. She's heartless, taking away that ice rink from his children. And last but not least, I do believe he's back from parts unknown. I suppose there's only one way to find out. As we are joined now by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, are you back from your bunker in undisclosed location, sir?
I might be. I don't want to say. It's kind of fun being from parts unknown. I mean, it's but yeah, back to the usual spot again. I just had to go out and take care of some business on the road the last couple weeks, and I'm back.
He's back, and so are we. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what is trading. And, you know, it's been the on-again, off-again dance for the better part of 16-plus months now. And it's on again right now. Some nice talk coming out of China and D.C. here, of course, about the trade war. It looks like they're close to inking some more deals out there. So the market liking what they're seeing. Most of the major indices firmly in the green today. NASDAQ leading the charge, up nearly 1.1%. The Goldilocks of S&P right in the middle. They're up a little bit more, almost 0.9%, close to it. And the Dow, ever the laggard, only up about 0.2% or so. Gold, of course, taking a bit of a break off of 1.6 points or so. So right around that 1480 level or so. So still shy of that 1500 level. And WTI ticking over the 60 handle, 60.2 or so out there, which is interesting. Of course, you like all things WTI and everything else, metals. A lot of that on the show last week. Check out TWIFO if you haven't done so already. And, of course, all that green on the screen means our old friend, VIX Cash, taking a bit of a break today. Got down as low as right around 1175. Coming to showtime was right around the low of the day. That puts it around almost 3 handles lower than where it was last show, about 2 3/4 points. It's since bounced a little bit off that, threatening the 12 handle again right around 1190 or so, but still off nearly 3 points from where it was this time last show. Our old friend VVIX, a.k.a. the volatility of volatility, also coming in a wee bit off nearly 10 handles from where it was last show, down to about a 94. Remember, it was north of that triple-digit level for a while there on last show. And, of course, VXX just going away. Down not quite 2 handles, about 1.7 handles from where it was on our last show. So shy of the 15 handle now, 1490. That's a lot. That's a lot of going away in a short period of time over there on the dark side of VXX. But since he was away and now he's back, let's start with him. Mr. Uncle Mike, sir, what is lighting up your tape out there in your regular location today?
Never, ever, 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 ever in the history of the entire stock market has there ever been a better time to sell than today. It's an exciting day. It's a new market all-time highs. And it's all based on, from what it looks like, a maybe. It looks like it's going to happen. Deal with China is what it's looking like. So the fact that we have this strong of a market on maybe news, then I think that's pretty an exciting case to be made for the bulls. It's with all-time highs. You always have to take it with a grain of salt, especially in times like this. Because keep in mind, about a week and a half ago, I think it was, or maybe it was 2 weeks ago. It looks like we're not going to have another trade deal with China till after the election's over. So you don't know in things like this. But the fact that we're doing so well on a maybe kind of sort of, I mean, you can't really take anything seriously a lot of times with these announcements. But I think it's definitely a good sign for the bulls with things. The other thing is that silver is not getting crushed like it has been when we're having these announcements. And so silver is actually up 0.5% on the day. Nothing huge, but it's actually higher. Financials, XLF is tinkering around that 31 mark again. So it's definitely making some progress there. But the other thing of note, I'm just curious, I'm excited to hear Andrew's take on this when we get to him, is the VIX, and that should we get another 4 or 5 percentage points in the S&P for the rest of this year, and we start getting a decent-sized movement, not a maybe kind of wall of worry movement or whatever, I'm curious if he thinks that we might hit single digits in the VIX in the next month or so if we do continue to rally. Now, obviously, if we come down, I don't think we'll hit single digits, but curious to hear his take on that, because right now there's just a lot of attractive premium buying opportunities where I live. And so very exciting to watch. And that I know on this show, you're either a degenerate premium buyer or you're a degenerate premium seller, and you're on the dark side, whichever side you're on. I've noticed that throughout my 800 or so episodes on this show. But there's definitely a lot of opportunity, in my opinion, for buying premium out there in the markets in general. So that's what's lighting it up with me. A lot of individual names, but if we can save those for a little bit later. And one thing that I am going to do today as kind of a public service to our listeners is that this week is ex-div week for SPY, and I'm going to explain a little bit more about this. I'm going to dedicate a whole every chance I get to talk on this show today, I'm going to mention something about it because if you have short in the money calls, you need to be aware of what's going on with SPY, and I'll talk more about every time I get to talk today. More details to come.
I was just about to call you a degenerate premium buyer. You beat me to it, sir. So well done for you. And yes, that is a beneficial public service to all of our listeners because that SPY dividend, it creeps up on people. They always forget about it. And we know a ton of our audience likes to overwrite some calls out there. So always worth reminding them what lurks around ex-div time in SPY land. Let's go out now to that ever-turbulent land of Westeros where the Song of Ice and Fire is holding court. Mr. Song of Ice and Fire, sir. What are the Fidelity Legions up to today on this pretty strong upside day in the market, sir?
Yeah, so we have a couple of regulars on there. One of them I would just have to consider a regular now. Top of the list was Boeing, where we had 73% of the orders placed by Fidelity customers were buy orders. Currently, Boeing's trading at 328.09. It's down 13.56, which is just under 4% down. This was on headlines about them considering cutting or even halting the production on its 737 MAX line. Right now, it's below all its moving averages, or below its moving averages, and it broke below its lower Bollinger Band currently. When we look at the call-to-put ratio, right now it's 1.04 called to every one put traded, compared to its 90-day average of 1.43 called to every one put traded. So, and that's on the back of more put activity going on. So next one, probably not a regular, is we have AMRN Corporation making the list today at the number 2 spot. 71% of the orders placed were buy orders. It's currently trading $23.25, which is down 87 cents, which is just over 3.5% down. They were downgraded by an analyst today. It is, with that being stated, still above its moving averages. And initially when it opened up, it did break above its upper Bollinger Band, but it sold off since to actually pull back inside that Bollinger Band. The call-to-put ratio is an interesting one. It right now is 4.93 call to every one put traded, where its 90-day average is 2.73 call to every put traded. And it's already at almost 4 times its 90-day average volume at this point in the day. At the number 3 spot, we have Apple. Now, Apple right now is trading at $280.07. It's up almost $5 on the day, which is about 1.75% up. It's above all its moving averages. It did break above the Bollinger Band and actually broke through that upper Bollinger Band. The call-to-put ratio is sitting at 1.72 call to every one put traded, compared to its 90-day average of 1.33 call to every one put traded. The number 4 spot is, now I'm going to consider a regular at this point, which is ROKU. ROKU right now is trading at $137.24, which is up $4.74, which is over 3.5% up so far today. So the price right now is moved back to push on that 50-day moving average. It is still below the 20 and 50, but it is above that 200-day moving average. And it did push below that lower Bollinger Band, but has rallied back inside it currently. The call-to-put ratio is sitting at basically 1.5 calls to every one put traded, where the 90-day average is lower than that at 1.4 call to every one put. And lastly, I'm not sure if anyone's heard about this car company, Tesla. They have right now about 60% of the orders placed by Fidelity customers are sell orders. It's currently trading $380.37, which is up just about $22 per share, which is over 6% up so far here today. So the price is above its moving averages. It did break above that upper Bollinger Band with today's action. And it has about 1 2/3 call to every 1 put traded, compared to its 1 spot, 1 call to every 1 put traded. So that rounds out our top 5 of what the Fidelity customers are currently trading.
Thank you for that, Mr. Song of Ice and Fire. And last but not least, we have the rockingest of lobsters. Mr. Rock Lobster, I believe Mr. Uncle Mike had some questions for you. So what do you have to say about his queries on the VIX, and what is lighting up your tape out there today, sir?
We are very close to a single-digit vol. So I would say we don't have much farther to go. Will it get there? I think there is still enough overwhelm. Like you got like the impeachment thing, the trade thing. It's still, I don't think it's a 9 vol market yet. And also, when we hit those lows last year, there's a big anticipation of, as I recall, the tax thing going through, and there's a lot of real bullish sentiment on that. Basically, we're just trying to, I think right now, the trade thing is not totally clear, let's be honest. The rhetoric doesn't seem as bad. You certainly didn't see any weekend tweets that were worse, and you have VIX is at, I think, close to a year low. But as far as this goes, I think we can get there, we need some of those things to just be fixed. Impeachment thing is still an overhang wild card, even though the market seems to think nothing's really going to happen. The trade thing is still there. So, the earnings were okay, and this trade deal kind of happened, and we're at our 3,200 number. So it feels like all the things that should have happened have kind of happened. That the new NAFTA deal is done. So I would think, though, the market kind of has to sit like this and be happy at this level for a while for VIX to go lower. We're now pushing mid-January, which is kind of impeachment Senate stuff. I don't think it's going to be a big deal. What I will say, though, is a lot of the short-term risk premium has come out of the VIX futures. Some of that extreme stuff that we saw a couple weeks ago has receded somewhat. However, the way I look at vol, we have kind of a fair value number for vol at this point in the cycle. And the VIX cash, the Jan future at 1470 is still a little high. So they're keeping those futures kind of juicy for the reasons I think I described. And if history has been in any indication, that premium really doesn't release till very late in the cycle. So I think where where premium is for TOSAW's question is it's still in the term structure because it's way above our fair value numbers. So that stuff is still bid. And historically, we've seen that mostly that's people trying to be long the market and long VIX in some way or some skew puts in the SPX or something like that. And it kind of translates into those futures being more expensive, which is where we are now. So I think, to TOSAW's point, unless we have the market kind of calms down because we've gone straight up now for about 2 weeks, which tends to pull the curve up a little bit, it makes VIX, it's harder for VIX to go down, which sounds counterintuitive, but when we go straight up, it's hard for VIX to go down because downside puts in the indexes, it takes a while for them to come in because liquidity providers short those and they're short underlying. I know it sounds confusing, but it's a lot of math, basically, that keeps it where it is today. So until we have a little bit better news, I don't think we would see a single digit within a month unless everything went perfectly. So I would that this 12 handle has been pretty solid the whole year. And and I think it's kind of what I'll call, or the mid-11s, until the trade deal is sort of, we've moved past that. I think it's going to be hard for us to get below it. So that's the simple answer there. I don't even know if that was simple, but that's my answer.
I was just going to say, nothing about that was simple, but it was all good at the end of the day. And you're right, it is kind of somewhat counterintuitive. It takes a while for that juice to come out. Until the juice comes out, you can't see VIX get below those critical thresholds that I know some folks would like to see. Others, not so much. Let's see what some folks are up to out here in the marketplace. As you might imagine, pretty active day, probably even more active than you might guess, given the fact that people have been rumoring this trade war deal for a while. In fact, we saw phase one of it, quote unquote, coming late last week, so it seemed like the rest of it's maybe a bit of a done deal. And yet we're still seeing a lot of paper on the tape today. VIX blowing the doors off what it's been up to lately. Remember, we've said for a while now on Vol Views and even this program, that VIX has been struggling to maintain that 400,000 ADV. Well, it's going to go up a little bit after today. That ADVs are a little bit north of 400K, but they're doing already 700, nearly 750,000 contracts on the tape out there for VIX land. It's been a while since we've seen VIX threatening that 1 million level, and might be out there seeing that today. So we'll stay tuned for that one. A lot of paper going up out there. SPY, same deal. ADV is right around 2.5 million. It put up almost exactly 2.5 million as of pretty much right now out there in SPY. SPX, similar deal. The ADV is about 1.1 million. It's at about exactly 1.1 million. So we're seeing a full ADV's worth of volume go up already in both of those major products. The Q, pretty much a similar deal. The Qs are around 470 for their ADV, and it's about 425,000 out there right now. So threatening a full day's worth of paper in the NASDAQ. And the Russell's the only laggard. IWM, the ADV is closing in on 300K, and they're at about 220,000 out there right now. So still active, but not quite lighting up the tape the way the other major indices are. Turning our attention to the individual equity options out there. Let's see what's lighting up our top 10 here, most active equity options. And this is, again, as of a few minutes ago, we just pulled this. So number 10 cost you exactly $1.50 to break into the top 10 today. That'll get you to our old friend, as Mr. Song of Ice and Fire said, kind of like a stalwart now in the top 10. This is ROKU, the set-top boxes that just keep on giving out there from a volume, from a volatility, from an overall interest perspective. You guys love it. Clearly, still at the number 10. Usually it's a little bit higher. Today at a mere number 10 with 150,000. Number 9, good old AMRN, $1.53 on the tape. Number 8, our old friends here across the street. Haven't seen them in the top 10 in a little bit. This is Boeing with 159,000 contracts. Number 7, Facebook with 178,000. Number 6, good old Softy, $1.87 on the tape for them. Number 6, Micron with 225,000. Number 4, AMD, another perennial top 10er out there these days, 232,000 contracts for them. Number 3, the aforementioned Tesla, getting up there again, 442,000 contracts on the tape out there for Tesla. Let's just see how much they're moving today. Oh, up nice whopping 22 handles, or nearly 7%. Let's see. Oh, yeah, some optimism out of China apparently is enough for their factories, is enough to send this bad boy moving. 22, threatening that 400 level again out there in Tesla, and clearly threatening some size paper out there from an options perspective as well. Number 2, one of our frequent offenders out there of late. It kind of wasn't on our radar for some time, and then now all of a sudden it's out there quite a bit, is Danaher. This is ticker symbol DHR at exactly 152 right now. So it's up about 2.33% and 575,000 contracts on the tape today. So pretty active out there. And if you're saying to yourself, wow, what the heck is number 1? And how much paper did they do? I think you can probably guess number 1 because you haven't heard their name yet. They're usually a number 1, but they're even managing to outpace Danaher, which is lighting it up yet again out there. Apple, 1,000 contracts more, 576, getting it to the number 1 spot out here on our top 10. So a pretty active day across the board. Of course, news of a détente with China. Good news for Apple. So interesting stuff out there. But Danaher, man, continuing to light it up. Let's look really quickly where most biased paper is out there today. That'd be Facebook, 73% of it. Actually, I take it back. AMRN with about 83% of it on the call side. And Danaher actually is the other way, 63% biased towards the puts. So some of our first top 10 paper that has a strong bias towards the puts out there, which is kind of interesting in and of itself. We're always talking calls out there. If you're wondering about AMRN, this is AMRN Corp. It's a biotech out of New Jersey. So interesting stuff cooking out there as well. Speaking of all stuff cooking, if you guys are interested in earnings, there still are some names popping off this week. We got the aforementioned Micron coming out on Wednesday. FedEx is tomorrow. Navistar as well. General Mills on Wednesday. Rite Aid and Nike on Thursday as well. I think you're going to be hearing about Nike again in a little bit. And then CarMax and good old BlackBerry. The engine that keeps on trucking out there. BlackBerry on Friday as well. So there still are some earnings. Let's look at FedEx really quickly. We have the earnings report courtesy of our friends over there in Orat's land. Coming into time of this report, FedEx reporting on the 17th after the bell. So tomorrow, the stock is at about exactly 159. They were pricing in a little over $9. And in the past, they've moved a little bit under 7. So they're a little bit rich out there from a straddle perspective. So we'll see how that plays out. If you like that kind of data and a lot more, it's all available for you for free. TheOptionsInsider.com. Click on that options news and articles tab to begin your journey as we keep continuing our journey into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the odd block.
Let's get to it. The weird, the wild, the wondrous paper that came across our radar as highlighted by our Eye of Sauron out there. And, we like to have a little mix. Some small names, some weird names you never heard of, some cheapies, and occasionally some names you may have heard of sneaking onto the list as well, like our number one name here today. This is a footwear company, also a company known for paying extreme amounts of money to athletes for sponsorship. This is Nike. Ticker symbol, of course, NKE. I just mentioned them earlier in our top 10 most actives today. Well, some of that paper clearly coming under the auspices of our Eye of Sauron as well. Ticker symbol, of course, NKE. Nike trading $99.13 right now, up about $1.40. That's, of course, about 1.5 or 1.4% right now because it's right around $100. Let's see what this thing has done over the past year. Been a pretty strong year, looks like, in the footwear category. A year ago, they were trading a little bit shy of $70, so about 30 handles lower than where they are right now. And it's kind of been a long, slow slog to the upside with a few sell-offs there in between. They got up to around almost $90 in April, and then they sold off down to about 77 in May, then bounced right back up to almost 90 again in July, then got their wings clipped again back down to 78 and change. So it hasn't been all upside. There's been some sell-offs there as well. But ever since August, they've been pretty much trending back to the upside. And right now, they're pretty much right around their 52-week high, a little bit shy of it. It's 99.33, so we're pretty much at the upper end of that 52-week range. Like I mentioned, they do have earnings coming up in a couple of days. So let's see what the market is up to ahead of this earnings palooza on Thursday. Looks like somebody, Mr. Rock Lobster, likes himself some Nike to the tune of 11,250. Of these Dees 102 calls. So fairly out of the money. Not a ton. They're about a little less than $3 out of the money. Pretty near term, too. This is Dees. So clearly a bit of an earnings play going up out here. These went up for 76 cents. So at the time, this was actually through the offer. They were offered at 74 cents. These went up for 76. So maybe they needed to work it a little bit to get some size. Maybe it was a little tiny order lurking in the book, gumming up that NBBO. Either way, through the offer, again, there are earnings coming out on the 19th. Also worth noting, this one went up tied. So it went up over there on the Philly. So usually on the floors where you see these tied orders going up. And that means they had stock against it. So they, of course, came up, probably bought these calls, and then they sold stock against it. I don't know if I have – actually, I think I do have – I think the print was 98.67 where they put up the stock. So a wee bit lower than it is right now. So that changes the narrative a little bit because we know there was a hedge leg to this. Mr. Rock Lobster, not our usual pre-earnings swing for the fences because they did a stock leg with this as well. What's your spidey sense telling you for these tied pre-earnings calls in Nike, sir?
Well, it seems like that fill looks pretty good right now. 76 cents. He's up 28 cents.
Yeah, he's looking good on those. Not on the stock, obviously, but he'll make up for it on the options.
Well, didn't he pay 76 cents for them on this?
For the calls, yes. Yes.
Yeah, okay, yeah. So this doesn't look like an unreasonable earnings spec. I would think, just paying $1 for a call, it's $3 out of the money. I think it has a shot, and you're probably not going to see a whole lot of decay between now and the 19th on that option. So it feels like one of those free riders until the earnings come out, to be honest.
What about doing them tied? Does that float your boat? Pre-earnings tied? I'm always kind of iffy on that. What about you?
You know the deal, right? They're going to crush the ball one way or another. So when you do it tied, now they're betting on sort of a $6 move, right around that area at least. So yeah, you would need a substantial move for that tied trade to work. Just Nike going to 103 is not going to cut it.
Yeah, it seems like you're making it a little bit almost of a bridge too far with the tide leg. Because obviously, you're right. Then you're trading essentially the vol component, and we all know what usually happens after earnings. So you're making it even harder for yourself. So that's why I'm not pre-earnings. We talk about pre-earnings trades in general being not huge fans. But in general, if you're doing it this way, not saying I want people to go out there and to swing for the fences and buy premium willy-nilly. But when you're adding this tide leg, it makes it a little bit more challenging now for this fellow. So tell you what we're going to do, because we're nice, charitable folks here. And this is the near-term one. We can come back to this one, maybe even on our next show, see how he fared, Mr. Rocklop. So we'll come back to these pretty soon and see how our friend did, not just with the options, but, of course, with that stock leg. I don't have his delta, but I'm assuming he did them delta neutral, not 1-to-1. Obviously, 1-to-1 would change that narrative entirely, a different beast. So let us know what you think. Do you like doing stuff tied? Obviously, sometimes you have to do a stock leg to get these things done as well. I understand that from an execution perspective. It might be a necessary component, but again, it makes these trades a wee bit more interesting, shall we say, for our parsing here on the odd block, if nothing else. Let's move on to some more straight up options action. We're going out this time. If that was too well known for you, you like to get a little bit more obscure, but still pricey, we got you covered with our next name. This is IFF, a.k.a. International Flavors and Fragrances. I know you know this name. I know you wake up every morning, you have your coffee, you brush your teeth, and you check your quotes on IFF. At least if you're like me, that's what you do. And so trading today, pretty much exactly 120 out there. Not a good day for I actually just ticked off. I lied. 119.99. But it's off nearly 14 handles, a little over 10% on this name. So a rough day here for IFF. Sounds like a little bit of corporate action is the culprit for this. This IFF is going to be acquired or merged, depending on how you read it, with DuPont's nutrition unit in a $26.2 billion deal. So apparently there's a bit of a bidding war, and these guys, IFF, winning out here in the end, spending quite a bit here, it sounds like, to do it. And so the stock taking a wee bit of a drubbing, as you'd expect if they're shelling out. Sounds like they're shelling out $26 billion. So a lot of this obviously corporate action driven. Let's look at what the stock's been up to over the course of the past year. A year ago, it was higher than where it is right now. It was about 132, so about 12 handles north of where it is. Then it rallied up to almost about 146 in February. Then they got its wings clipped back down to about 127 in February. Kind of languished there for a while. Then rallied back up to about June to about 152. Stayed up there for a while. That was pretty much right around their 52-week high for the year. And then by beginning of August, they got clipped again. By mid-August, they were trading 108, so down nearly 50 handles from their high there. So bad times in August. Maybe some bad earnings, maybe some other corporate action stuff going on out there. Then they rallied a bit up to 127 again, so got about half of that back in September, and then they kind of languished down to 120 again until recently. Back early November, they started rallying again up to nearly those highs again, up to about 142 again in December. So this name's kind of been all over the map over the course of this past year. I got to imagine a lot of this corporate action driven. And then in this actually about a week ago, they started getting their wings clipped again. 142, then down to 134, and now down to where it is right now, 120, on the heels of spending some cash out there as well. So an interesting topsy-turvy year here for International Flavors and fragrances. Surprise, surprise. They make flavors and they make fragrances. That's a great description for the company. Let's see what was up here. What did our Eye of Sauron discover for us out here today? 115 puts in January. So a little bit out of the money puts here, going up for 90 cents, a little bit off the offer. There were 70 cents at 95 when they went up. Not quite 5,000 times, about 4,700 of these bad boys. These are opening, going up over there on the ARCA. So Mr. Rock Lobster, looks like we got some open and downside put action. Could be our friend here. Took a look at this chart. Maybe he's been wearing this chart for the better part of this year. And he's like, you know what? I'm done. I can't stomach this turbulence anymore. I want to stop myself out at the 115 strike. If that's the case, he picked an interesting time frame. January isn't that far to buy some protection. So interesting stuff there. I think maybe our friend is just specking on some more near-term downside ahead of all this crazy corporate action here, sir. Also, I should note they have earnings, but not in this cycle. They're in February 12th. Mr. Rock Lobster, what do you think about these corporate action-driven puts here in international flavors and fragrances?
Interesting. I mean, they're winners right now. I'm trying to figure out, I guess the market does not like this corporate action. I mean, you think with a name like International Flavors and Fragrances that you're kind of hitting everything. You're international, you're selling flavors and fragrances.
You got it all, babe. All the Fs anyone could want.
Interesting. But as of right now, I mean, they're right on the puts. So an interesting looking trade that looks correct so far. That's all I got to say.
Very interesting indeed. All the Fs you could possibly want. International flavors and fragrances. To move on to our final name here on the odd block. This is another kind of obscure one for you, which we like. We like seeing some weird names here on the odd block. This last one is almost said Metallica. That'd be a fun one as well. Metallica options. But no, it was Medallia. Medallia Inc., ticker symbol MDLA. This is a customer experience management company out of San Fran. So that tells me literally nothing about what they do. Trading right now about 31.40, off about a quarter out there today. Over the course of the past year, they were trading a year ago. They're trading $37, so north of where they are right now. They gapped up in, maybe you were fairly new on the scene here because my chart's only taking me back to July, unless there's some issue with this data. Maybe they went public not too long ago. But they got up to about, looks like about 43, almost $45 in July, and that seems like that was the high for the year. And then right down by the time September came around, they were trading 26 again, so got their wings clipped pretty hard there. And they kind of been bouncing in this 26 to 30-odd range for the better part ever since September there. They've kind of been dancing in this range. And right now, they're kind of on the upper end again, right around 31 and change. So coming off a little bit today. Let's see what our Eye of Sauron picked up out here today. Looks like it's some puts. And looks like one of your old favorite trades, Mr. Rock Lobster. It's the line in the sand puts. This time coming up on the 25 strike. So a wee bit out of the money, about 6 handles and change. Going up in Jan, the Jan 25 puts for 25 cents, which was right off the bid. These were not surprisingly pretty wide. This name not exactly trading a lot. These puts were 20 cents at 75. So enjoy that market. 4,741 of these going up in the print that caught our eye, but it's worth noting a lot more have gone up on the day, a total of over 10,000 total on the day. So Mr. Rock Lobster, someone drawn a pretty sizable line in the sand here in Medallia Inc. Could be someone deciding, hey, at that level I want to pick up a bunch more. Could be someone just looking for a little bit of the old harvesting of the risk premium. Worth noting, I should say, they have earnings, but not in this cycle. The earnings are on March 11th. So, Mr. Rock Lobster, some non-earnings, but pretty sizable line in the sand here. And everyone's favorite customer experience management company, Medallia Inc., sir.
It is. I think this is a line in the line in the sand supreme. Picking a relatively low strike, low of the year. It just has all the hallmarks of that trade. What's the return? They're about 1% to January. Not terrible. And you pick up the stock at $25. I don't know. It doesn't seem too bad to me, to be honest. I know nothing about Medallia, and I don't know what kind of experience they want to give us. The company offers a range of products, CX, BX, EX, and PX, whatever that is. So if you don't have enough X in your life, you can go buy some at Medallia. But it looks like it's a company that, technology company, blah, 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 but it looks like somebody's trying to scoop some stock there. That is what it feels like. Oh, and I will say one other thing just for listeners. I trade Twitter. I do have a bit of a long position in it, and somebody is trading a lot of the December 27-31 calls today. Just as a little extra gas for our listeners out there that are interested in such things.
A little extra nugget of info. Get all the X's at MDL. So you want your F's, you go to IFF. You got your X's, you go to MDLA. By the way, listeners, they did go public this past year. They went public in July at $21, which is why my chart starts in July. They were expected to go public at 16 to 18. They're public at 21. So maybe someone out here, obviously they rallied high and then kind of came off, which is the chart for a lot of IPOs these days. Maybe someone deciding he wants to scoop some more at a price a little bit north of that IPO. Tell you what we'll do here, listeners. We'll come back to our friends here in the X's, and we'll watch these bad boys. A lot of names to watch, listeners. As we keep on rolling, you know what you guys like to watch. It's your SPY divvies. So let's get to it, a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, it's Monday. He's back from parts unknown, ready to dispense options, wit, and or wisdom. Uncle Mike, I'm out there. I'm just overwriting my SPY calls. I'm enjoying life. I don't really need to pay attention to much else because, what could happen in a very staid index like SPY that could disrupt my covered call writing? Why would I need to pay attention to such a thing, sir? What could possibly happen?
Oh, the great mystery of all option trading, Mark, the dividend. Dun, dun, dun! The dividend. The dividend is something that oftentimes is overlooked, and beginning traders, sometimes when they overlook it, think that they are getting something for nothing. They've conquered the market. They've figured out how they can get a license to print money, and they've only been studying options for 3 weeks. Man, they're smart. Well, let me tell you about the old dividend. A couple things with a dividend. Let's first take a step back for a second, and let's just say that we're just trading stocks. If you own a stock and a stock declares a dividend, you want to get paid the dividend, which is a disbursement of profits from the company, or maybe more borrowed money from the company, either way that they're giving out as a dividend, whatever the case may be, it's income to shareholders. If that is the case, then you have to be in the stock the day before the ex-dividend date. And so when you're in the stock the day before the ex-dividend date, then that qualifies you to be a part of that dividend. So let's say XYZ stock's trading at $100 a share, and they declare a $1 dividend, and the ex-dividend date is this Friday, December 20th. Well, that means you need to own the stock the day before the ex-dividend date. And if you do that, you can then turn around and buy the stock Thursday, sell the stock on Friday, and you will collect this dividend. The payment date will be, 4 weeks, 5 weeks in the future, whatever they decide to do. It doesn't make a difference if you're in the stock or not on the payment date, so long as you're in it the day before the ex-dividend date. So the way this also works is in the world of stock trading, you can also sell a stock short, meaning you're bearish on a stock, so you can sell it short, meaning selling it without owning it. By doing that, if the stock goes lower, then because you're short the stock, you gain money on it. Then you buy it to cover the stock at a lower price, you make money. Of course, if the stock goes higher, you lose money on it. Now, in the world of shorting stock, though, works a little bit different. Everything that I had said about the dividend, let's say that you're short the stock, you have to actually pay for that dividend out of your pocket. But Mike, that is so unfair. How can that be? How can such a thing be? Well, on that, let's assume that there's absolutely no buyers or sellers in that same stock that day. Then that stock will go lower by an amount equal to the amount with which that dividend was. So it balances itself out. Now, let's go into the option world for a moment. And let's say that you're short a call option. If you're short a call option, whether it's on a covered call or whether it's a naked call or whether it's part of a spread, make sure that you turn up your volume and listen to the words that I'm about to say, because they're very important. And especially if you're, and if you're in an SPY for any of those things with which I had mentioned. I'll give you a moment. Go ahead and turn up your volume. All right, very good. Now that I'm talking to you much louder than I was a second ago, hear the importance of this. If you are short a call option and it is Thursday and that call option is in the money, and let's say it's significantly in the money, and that call gets exercised or you get assigned, all of a sudden you're going to wake up Friday morning and being short a bunch of stock. You're thinking, holy cow, why did they exercise that call option? And the reason is because him or her, the person on the other side of the trade, wants to collect that dividend. And oftentimes, let's say that you want to buy a deep in the money call, you exercise the option that day, then in theory, you could actually collect a dividend and have much less risk of just simply owning the call instead of owning the stock. And you only have to be in it for one day. Now, we can talk about dividend spreads another day. There's people that actually do that as a specific strategy. But what I want to talk about is the people that are just short call options. So if you have a covered call and it is in the money and you're concerned that you might not be in that stock, well, a reason that a lot of people exercise calls is because they want that dividend. If the call's in the money, make sure you take a look at it and see, is this something that would make sense to exercise if I was the other side of this? Same would hold true if you're in a vertical call spread where you're short a call or a horizontal or diagonal call spread where the call is in the money. So with that, how can I tell if I'm at risk of being assigned? Well, let's say that you're short the SPY 350 call and it's worth a penny. You're probably not at risk of being assigned. The way with which you take a look at it is that you see what the upcoming dividend is for SPY. You can just Google search it. And you want to see, is there more extrinsic value in my option than that amount? And is it significant? So let's say that the dividend that SPY declares, and I don't know it off the top of my head, but let's just say it's roughly $1.50 for this quarter. If you have more than, let's say you have $3 of extrinsic value in your call option, aka time value, the person on the other side of the trade is probably not going to exercise the option. If there is maybe 50 cents of extrinsic value in that call option, well, you can pretty much make a sizable wager saying that they are going to exercise it if they're on the other side of the trade. So if you have any concerns with that, call up your trade department. And the bottom line is that, are you short calls on SPY, especially expiring this week? If that's the case and you're concerned if you're going to get assigned early, call your trade desk at your broker. The guys at Fidelity, I'm sure, are going to get calls on this. Or if you're one of my clients, call me and you're concerned with this, I'll talk to you about it. If you're not one of my clients, call me as well. I'm happy to talk to anyone about this, just because this is something kind of near and dear to my heart as a retail trader most of my life, or most of my career, or a lot of my career until I became professional about 10 years ago. And I think that it's something that you really need to have a firm understanding of. And once again, if you do call me and you're not a client, I can't give you specific advice, but I can definitely give you general answers to help you to get to where you need to be. So with that, if you have in-the-money calls on SPY, look at them. And that is the strategy block for today.
Mr. Song of Ice and Fire, I'd have to imagine this time of year with SPY land, a lot of Fidelity clients are writing calls out there. Is this a topic of conversation? You getting a lot of calls on this, or maybe is it after the fact when people call you up and say, what the heck happened? How does this usually play out for you guys?
So we actually do get quite a few calls on this. Unfortunately, it is a lot of the times the aftermath that we get that call. We really hope that people do exactly as you explained. Look, take a look, see if you're in the money, give us a call to talk it through. We always, when we talk about the idea of the assignment risk on those, we always, state when you're going through your trade process, make sure to look out for those binary events like the ex-dividend day, because that could definitely play a pivotal role. I would say there are a few times that we will get the call before that ex-dividend day and have that discussion. As a matter of fact, that phone call that we got about a short block spread was on SPY, and the ex-dividend day was coming down the line. So that actually started that whole box spread discussion we had way back when. But I will say a lot of times we will get the call after they get a sign and they find out they have to pay that dividend. It happens way too often, and this is something that gets overlooked way too often. So I would, if anything goes hard, make sure to take a look for that ex-dividend day. That is something that the majority of traders just overlook, and it's unfortunate.
Yeah, for something as simple and as commonplace as this is, it happens all the time, like clockwork. It still seems to catch people unawares all the time. So, yes, hit up Uncle Mike, or if you're a Fidelity client, hit up the folks at Fidelity. They can walk you through it before it happens to you. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, let's dive right in. Mr. Rock Lobster, we'll start with you, sir. What is on your radar for the coming week, sir?
You know what's weird is this feels like one of the first times in a long time I can, what's on the radar? Nothing. It's a really odd, earnings aren't until January. We got to, if we say Santa Claus rally, we'll probably get hate mail. We've already had it. It's sort of like, I hate to say it, but I'm like, okay, Iron Condor, hedge with some mixed call spreads and forget about it. That's about where I am. We're looking for like some dumb time spread. I don't see a whole lot happening on the upside because essentially all the stuff that everybody's been wanting, 3,200, trade deal, it's like, it's here, it's happened, it's great. And yeah, so I think if anything will get Mr. TOSAW his single-digit VIX, it will be the market just going sideways until we have another level of news. So even with the VIX at 12, maybe that type of thing. So I would like to say, I think I have Walgreens is coming out in the early January. There might be some other retail coming out, but for the most part, I have to admit, I'm in the kind of meh stage, the ambivalent stage on here, what's going on.
You're more focused on the ice rink than on the markets for the rest of the year here. Mr. Uncle Mike, same question for you, sir. What is on your radar for the rest of the week?
Santa Claus rallies, big trade news, all of it. We're moving a lot. No condors or time spreads. No, I'm just kidding. I just wanted to see if we can, right now, the mental barrier for the marketplace, or the key number, is 3,200. I think we topped out today so far at 3,197. So wanting to see if we can break through that, and just seeing what could happen on the Twitter account, and seeing if anything will happen, to see if the president wants to take the holidays off, or he wants to do a few things to get it up just a little bit higher, so that way he can say going into election season, last year we made X percent, just to get that number just a little bit higher. So we'll see where things go with it, and ultimately more buyers than sellers, or more sellers than buyers.
And Mr. Song of Ice and Fire, last but not least, sir, what is on your radar, and what are the Fidelity Legions paying attention to for the rest of the week?
So, we're, it's something I'm keeping an eye on, is that 3,200 level. I know it's mainly psychological, but still interesting to watch around there. Also, with the VIX being down below 12, which is just baffling. But I guess it makes sense, because we are just continuing, just seem to create a new all-time high each and every day. As well as, we do have the impeachment vote going down to the full House. So interesting to see that. And it'll be interesting to see if they actually sign the trade deal and go through with it. It sounds like they're going to, but I'm still waiting for actual confirmation of that. Just when it's done and over with, it sounds like it's there, but I want to see it signed and on to phase 2 at this point would be the next step. So those are the things that I was going to take that I'll be watching along the way.
All right, listeners, that little bit of music means come to a close here for the option block. But if you're saying, hey, I like a little more in my ear holes, I like to talk a little more volatility, all that good stuff, well, stay tuned. We'll be back in exactly an hour, a little more than that, an hour and 3 minutes. Back with the crypto rundown. Gonna have some fun guests on joining me talking about, if you said to yourself, hey, I wouldn't mind something like the VIX, but for Bitcoin itself to measure and track and harness all that crazy volatility out there, well, we got a great guest for you to talk just that. In the meantime, of course, if you're listening live, we'll pipe in some fun stuff in there for you, maybe a little bit of Options Playbook Radio, breaking down some fun plays and some names you love, like ROKU and everything else. And we'll be back in exactly an hour. But before we go, we're not leaving yet. Let's go back around the horn and see what everyone else has that may interest you. Let's start in the land of the Song of Ice and Fire. Mr. COLIN, sir, if folks are intrigued, they want to kick the tires over there in Fidelity land, where should they go? What should they do?
Yeah, so you certainly check it out on our website at fidelity.com/options. You can see all the different analytical tools that you can use that can guide you through your trade process, as well as seeing all the resources that are available in our learning center, as well as our online virtual classes that we teach. And if you want to have a discussion, let's say about ex-dividend days and selling call options and that assignment risk, give us a call, 877-907-4429. Certainly we're here to help you out. And if you'd like to have a discussion about strategies and, that assignment risk, you could always ask to speak to trading strategist or you could ask to speak with me directly. We're here to help you out in any way that we can.
There you go. Fidelity.com/options is the place to go to begin your journey. And Uncle Mike, if I want to begin a journey in options-oriented wealth management, where should I go? What should I do?
By all means, come to stcharleswealth.com. More than happy to discuss how we actually use these crazy products in the wealth management circle. And once we talk about them, you realize they're not so crazy. They really make a lot of sense. And that's what we can talk about. stcharleswealth.com. We're more than happy to have a conversation with any of our listeners.
There you go. stcharleswealth.com. Kick the tires and light the fires. And Mr. Rocklops, last but not least, if I'm intrigued by such things as volatility newsletters or webinars or maybe even some text alerts throughout the day, maybe some live chatting, where should I go? What should I do, sir?
Come to options.com and go to look for our members member area, where our membership area. You can check out the vol newsletter. I will be revamping it a little bit this year, mostly just to start with some more basic vol education. So that way, people that subscribe to the newsletter will basically, by the end of the year, they will be vol trading pros. That's the idea. I think they'll really enjoy it.
There you go. OptionPit.com is the place to go. Sign up for the newsletter. You, too, can become a vol trading pro. And on behalf of the Rock Lobster and Uncle Mike and the Song of Ice and Fire and indeed myself, I want to thank all of you for downloading, streaming, subscribing. If you're listening live, stay tuned. We'll be back in exactly an hour. Give you some good stuff in between. We'll be back to talk Bitcoin, VIX, and all that good stuff. Skew volatility. A lot of stuff going on out there. We'll get to it. And, of course, otherwise, we'll be back again just later this week for the Advisor's Option. We'll be back again on Thursday for TWIFO and, of course, for another episode of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.